Welcome to Yield Nerd, an educational show about how you can acquire and manage yield.
All right, yield nerds, we are on to episode 117. And as the equity investors, the growth investors picnic out in front of the New York Stock Exchange, I see some storm clouds brewing. So I thought I would share what I'm doing about it and how I'm thinking about it. But hey, if you like growth investing in today's world, party on, my friend. Let's see how it goes. All right, we are up to 291 subscribers. Wow, thank you for your support. And if you're new, remember to use the playlist. Most importantly, remember that I have no magical powers of prediction. I share my lessons and my education. You need to think on your own. Well, the agenda for today has four parts. Look at how cool I am, because I am going to run around and say, yes, I did it. I'm going to share one of the tips that I shared, and this was the second after Cal-Maine Foods. One of the equities that I was very excited about, the Magnificent Seven filter. I will talk about another win that happened earlier in the week. I'll review my portfolio and I'll review the next lunch money pick and what I'm doing from now on for the next couple of months. Well, you may remember the Magnificent Seven, or as I call it, the Value Magnificent Seven. If you don't, I suggest you look at some of the prior episodes to understand how we come about it. This is not just a growth focused filter at all. It is all about the fundamentals, all about how many dollars do we pay for $1 of cash flow? How many dollars do we pay for $1 of earnings? And what is the profitability of the company and so on? Magnificent Seven isn't exactly seven companies. It would lead to a subset of companies. Some of the superstars from there, in my opinion, superstars, you do your own homework, are Cal-Maine Foods, TK Tankers, and so on. And there is this other small cap player called Encore Wire. I've talked about Encore Wire several times. You know, the beginning of February, the middle of February, the end of February, the beginning of March, and I kept accumulating Encore Wire in small positions all along. And guess what? Drum roll. Encore Wire went vertical a week ago. It went from 260 something to 288 or 290 or something like that. And there is a reason it did that. The good folks at Encore Wire said we've made enough money. We are going to sell it at $290 a share. And Encore Wire, thank you for giving me that exit. And as soon as they said they are going to sell it at 290, I sold my positions at 290 and had a very nice profit from that trade. And so with that, another win, it gives me more confidence in my value filters. I thought I would review the rest of my portfolio at a reasonable level of detail. And before I go there, hey, how is the market doing for you? The last month, all the indices are in red. And, my little boring portfolio in the last 6 months only goes in one direction. In the year to date, only goes in one direction. And in the last month, also only goes in one direction. These ups and downs are mainly because I have some dividend producing ETFs. And the day after the dividend, which is the ex-dividend date, the fund managers intentionally crash the price. And there is a reason for that. They don't want you or I to sit there and try to game it by saying, I'm going to own it, buy it the day before the ex-dividend date and sell it the day after the ex-dividend date. So you kind of see this behavior where they force you to own it for a certain period. I obviously own it the entire duration. So my point to you is value investing has worked out reasonably well after all. And here is a comparison of me to the Dow. Of course, in a 6 month period, Dow had a story, Cinderella story in Q4 last year, can't come close. And for this year, it looks like so far, I'm beating the Dow very, very handsomely. That looks good to me. Value investing sounds good to me, but we'll see how it does in the long run. Having said that, here is my next lunch money pick. Look at how cool I am. I am trying to both be a growth investor and also be a value investor for the most part. So I am Captain Cool with bags of money, while the rest of the growth investors are having the real party. I can't join them at their really cool party, but I'm kind of making do with a little bit of fun. So here's what I did. I went back to my Magnificent Seven and I threw a dividend filter on top of it. Meaning, not only should you be a cheap stock with huge cash flows and low debt and high profits, you also need to pay me a huge dividend. And so as I started sifting through that, that kind of narrows down the list a lot. I am about to discuss another equity. I want to make sure you understand that I am not a wealth management advisor. This is not investment or tax advice. Invest at your own risk. Chord Energy is what comes up. Their symbol is CHRD. And here's why. Obviously, they meet the Magnificent Seven value criteria, which you just saw. They also have a pretty nice dividend, approximately 6%. And those are qualified dividends, which means the tax treatment is very good as well. And here is what they ended up doing, which is just astounding. They had something of the order of a 20% dividend 2 years ago. That was when oil prices were high, they were making money hand over fist. That went to a meager 10% last year. And this year is catching up on it. They've already given a couple of bucks in dividends, and they are lining up to give more. And my instinct, again, you should use your own judgment, is that there is a dividend play here. Let me explain more. Every year, around May 15th, they make the announcement, or actually May 3rd, they make the announcement saying whoever owns our stock 2 weeks later will get a regular dividend of a buck 25 and an extra dividend, which is whatever number it is. And so give or take 325 is what they will pay off. Announce it on May 3rd and you get the money on May 30th, but you just need to hold it for 2 weeks. Now, is their stock going to go up or down by $2? I don't know, but I love this stock for the simple reason that they meet the Magnificent Seven criteria and they also pay a very handsome dividend. So that is something, I took my profits from Encore Wire, I sold my positions there, and I figured, well, let me see how it works. And so I bought Chord Energy. And so something for you to do your own due diligence on based on their dividend history. It looks like it might be a wise bet for me. Don't know about you. So here are my trades. Outside of that one little venture into Chord Energy, I am staying in very short treasuries. And I'm also, venturing into a couple of other things. Here is Chord Energy. I bought them twice. I sold Encore Wire, and I am looking at thinking about the future slightly differently. Let me explain what I mean. Um, if you look at a USDA paper on crop prices, this is indicating that the price of food grain is going to go down. Ironically, if you continue reading, it says the same department, USDA, predicts higher prices for cattle and poultry. How about that? So if you're a poultry farmer, and you know where I'm going, I love Cal-Maine Foods. So if you're a poultry farmer, then your cost of input is going down and your cost of output is going up. How interesting, Cal-Maine Foods, I love you for that. And looking further into why is that happening, the big difference is in pork. China is hugely, hugely decreasing its imports of particularly American pork. And at the same time, when it comes to chicken, the US chicken export is kind of staying flat because 25, 24, 23, it's not a big deal. Brazil, in the meanwhile, is eating the rest of the world's share. What this tells me is the US is not going to be threatened by whatever the Chinese do or don't do with respect to chicken imports. So the US chicken export trade is a flat number. The US chicken consumption is a flat number, maybe going up a little as a matter of fact, but the price of chicken is going to go up and the input cost, the feed cost is going to go down. So I'm liking where this is going in terms of Cal-Maine Foods. Same with oil. We did do a deep dive in the previous episode. Please watch that. That's my thesis for TK Tankers. And so outside of Chord Energy, TK Tankers, and Cal-Maine Foods, I'm kind of sitting chill, waiting for the next few weeks to unfold. My moves, therefore, are to really look at what other people call inflation and some companies call earnings and position myself to be on the earnings side and not on the inflation side. I do believe, contrary to a lot of the press, that the election politics will somewhat force the hand of Chairman Powell to do some kind of an interest rate decrease between now and the election, and that may increase the price of stock. I don't know, but I'm not going to jump in anticipation of that. But as we get close to elections, my worry is more on on whether we are going to be able to disagree peacefully, whichever way the election goes. So, outside of speculating with lunch money, I'm just going to sit on the sideline with treasuries. You do you. Remember, even a blind squirrel finds a nut once in a while. Good luck.
Thank you for listening to Yield Nerd, a do it yourself show for yield accumulation and management.